Good evening, peoples. This is Bruce with Targeted Wealth Creation. Let's jump in here on the ROUNDHILL weekly payers. So as most of you know, we added the Russell RDTE, the Russell 2000. I was just watching a video from Tom Lee. Some of you know him, some of you may not. He's probably one of the most accurate market technicians, chief investment advisor, strategist, frequently on CNBC, had made a prediction when the S&P was 4,700 that we would see 5,700 a year ago, and that came true. He's saying that we should see 5,800, which we've been pretty close to recently. And he's fairly optimistic, but he says near term, short term with the election, war cycle, etc., we certainly could have some volatility. And I tend to agree with him, although I do think this inevitable pullback happens, whether it's anything of meat in October, meaning 5% or greater. It probably, I mean, we could go to 6,000 before we pull back over the ensuing 13 months. And I favor commodities, just as a reminder to people. But the S&P is still going to perform. It's not like it's going to massively drop. Even if it drops, it's an opportunity to buy from a longer term play. So let's jump in here. What did the S&P 500 pay? Well, they declared 20 cents. And let me go through the dates. All three of these are the same. They declare on the 9th. Well, they declare pre-market on the 9th, right? Really after the close of the 8th. So that's what you see in here on the price. So they declared 20 cents. How does that stack up relative to other paydays? Remember, this thing goes back to March 7th, I think. Well, the first payday was March 25, but inception date was either March 7th or March 9th. It shows on my next sheet, so actually I can, well, I'll get to that here in a minute. So what I did in yellow, well, it's down from 22 cents last week. It's up 2 cents from the 18.8 the week before. We had a 19. So what I started doing is color coding 20 cents and below. I should do it here as well because both of these are now history. I don't do it, when it's actually done. I do it afterwards to show up. So you can see it's not uncommon, but then again, this one could well be shown because it's a 20 center, okay? But when we look at 34, 23, 25, 37, we certainly see some outliers, right? 35, 41, 38, 38. Look at this segment of paydays, people. So obviously there's a variance here, but it's still a 1997. The reason the yield drops is because, look, we've been trending up 3 out of the last 4 weeks. The S&P has been moving up. This one dropped 36 cents. This is up 34, up 87, up 80. And this one was down $1 and down almost 46 cents. So you see a trend here. I don't know if it's a trend as much as, even though it's up, the payday's low. But again, the S&P 500, when you look at total return, even though the NASDAQ 100, okay, QDTE outperforms it in the dividend yield, due to the NAV loss, it actually is giving you a lower total return. Again, I know some of you just like to know how much am I being paid, right? You don't pay attention, but the reality is it matters. Okay, so let's take a look at QDTE, the NASDAQ 100. Also up on the weekly. Again, the key dates, every one of these are the same. So it declares, when I went off into saying when the fund started and all that. So 10/9 is Wednesday. You must buy on Wednesday to receive the payment. The X date is Thursday 10/10. When will you be paid? On Friday, October 11th. Okay, guys, how much are you getting? 26 cents. Look at that. That's higher than the last three payments, up significantly from 21 to 26. Okay, the yield is 32.84 based on a lower stock index price of QDTE. Okay, but again, it's also down from its inception. I know some of you buy it when it's on sale. More power to you. I think that's a great strategy. DCAN when it's down over time. If you do that multiple years, you pretty much guarantee yourself a good return. It's just, again, I'm a little negative focused on the S&P 500 over the next 6 to 9 months, but maybe negative as a 4% return, but commodities may give us a 25% return. So I look at sector analysis in that, but the S&P, if you have a multi-year horizon, these are great funds to be in. And I personally prefer the S&P 500 over the NASDAQ 100, although there's a few stocks I love in the NASDAQ 100. All right, so how about bigger payments? Well, here's a 56 cents, a 51. Remember this week? 8.5 was that awful August 5 drudging. I mean, the market just got beat to crap on the 5th, opened up even further down on the 6th, and then by the end of the 6th closed higher. So these things survived that. Look at this, only a 19 cent, right? So I yellowed the under 20 cent, but there's significantly, I'll probably go through and highlight 21. Here's where we are now, 26 cents. So you can see back in this time frame. So overall, that's nice. Let's jump in and look at RDTE, the Russell 2000. Okay, so it's only its third payment, right? 10/9 is all the dates are the same, right? You must buy on Wednesday 10/9. Paid almost 25 cents, but down quite a bit from the 38 cents and the 36 cents here. You can see it in the yield. It went from in the 40s down to under 30. Close to 30 though, 29.57. And this is one of the few indexes that dropped this week. The other two were up, the S&P 500 and the NASDAQ 100. All right, although this is still up since its inception, it's a very short period of time. So let's take a look at that, peoples. Here's my summary. All right, so here's XDTE. I know a lot of you comment this isn't relative, but you got to use some price to show if you're going to calculate total return, and it's impossible for me to do 100 different prices, right? 100 different days to know what you guys are doing. And then on top of that, people, and I fall into this category, I'll buy some at this price and some at this price and some at this price. So you end up having to average your price so that you can try and calculate what your actual capital gain. It's much easier on the dividend. So let's go through this. So here's XDTE, the S&P 500. All right. So it doesn't matter that you invested 1,000. That's not really relative. This is. So what's the current price? 52. Whoops. Did I update this? 52.29. It's possible I didn't. Hold on. I know I did on the Russell. Nope. 52.63. Apologize, people. I should just be reading this field. This one I updated. This one I don't think I did, so let me go do that. 42.68. And this is used in the calculation here. Okay, guys. So when you look at this, it's actually up, right? So if you bought it at inception, and I know everybody buys at different times, you actually are up 0.32% just on a gain and what it's worth closing on Tuesday evening, okay? So if you further look at that annualized, because we're 216 days into a 365 days of a year, right? So you have an annualized gain just on the underlying, right? You have 0.55, not a big deal, okay? Unless you're QDTE and you're down 1368, okay? But it has a very high yield, so it can sort of afford that. But let's look at the dividend. So it's paid $7.03 through all the distributions, including counting this one, right? So the dividend actual return is 13.4, but that's for 216 days. So when I annualize that, that's 22. So these numbers have to get added together. This is annualized dividend payment. This is annualized, think of it as NAV increase, right? Instead of reduction, it's an increase. So you get a total of 2319. Over on QDTE, all right, inception was 46.44. We're now at 42.68. So you have a situation where you're down 8%. Okay, well, somebody could look at that and say, yeah, but Bruce, I'm getting, a dividend yield of 19%. And you're correct. You're 11% ahead of the game, right? Well, let's annualize those, right? So maybe all you do is stay 8% for the full year, but you have to use an annualized number, right? And when you annualize it, it's saying, hey, that would be 13% NAV loss. Whether that's going to be accurate or not, we'll have to see. So there's where you get, now look at your dividend return. 216 days worth of a dividend return, you've earned $8.98 on a cheaper stock. So that's giving you 19% yield, which a lot of you are very happy with that, right? I know compared sometimes everybody looks at YieldMax, but YieldMax, I'm not in favor of their big NAV loss on a lot of their funds. So that just throws it out. I can live with 8% here, okay, especially with these payments. And there are certain YieldMax ones that do yield a good amount. So if they lose 15% in the NAV and they make 45 in the year return and you net 30, that's pretty good if you can sustain that for multiple years, which becomes more challenging. So I always say I prefer the S&P 500 because its total return is 23% compared to 19%. Well, this is going to come closer to reality because of the small sample size. A lot of you have heard that, right? It's like if I'm a hard worker and you see me work for 3 days and I do outstanding work, and you're looking at all your multi-year employees and you're saying, wow, they can't keep up with this guy. Well, let's see how this guy does when he's there 6 months or a year. Does he have that same work effort? And the same thing can be said because your sample size here on RDTE, inception price was 42. Well, that was only 29 days ago. Okay. So it's now 43.93, although it was down slightly, right? So you have a 4.6 gain. But look at when you annualize that. This is why this is so skewed. You show a 57. So basically 1 month, you're getting 4.5%. We'll multiply that times 12, right? 12 times 5 would be 60. Well, it's not quite 5. It's 4.6. So there's where you get an annualized 50. Not realistic that you're going to get a 57.84% return in the Russell. I mean, anything can happen. It could certainly happen in a year. It just is not going to go year after year after year, right? So this is skewed. This would be more on looking at the dividend yield. It's starting to, it was above QDET. Now it's dropping some, okay? So this is also outsized. It's sort of an outlier because of the small sample size. Okay, that's what I got for you, people. So I hope you enjoy this. I like to get this out. I think overall these are fabulous funds. I look at what ROUNDHILL is going to do in other areas with some of their single stocks, so we shall see. All right, peoples, this is Bruce with Targeted Wealth Creation. I'm not a financial advisor. This is not financial advice. It's for fun and entertainment. Hope you were entertained. See ya, peoples. Bye for now.